Good afternoon, people. This is Brian Onyango. I'm back with another video. So today's topic is gonna be about introduction to Forex. My name is Brian Onyango, as I've mentioned. I'm a Forex trader from Kenya. I have 7 years trading experience, and without further ado, let's dive into the video. So just one moment, I want to pull out my notes that I've taken for today's video. So we'll start off by defining what Forex is before we can actually hop into the nitty-gritties. So Forex can simply be defined as the exchange of one currency for another. This is best explained when one is visiting a foreign country. You're going to do a buy and sell transaction. For example, you're going to give out your base currency, the currency that you came with from your own country, and in exchange for the other country's currency. So what you're going to be doing is you're going to be selling your base currency in order to buy the foreign currency. So I think that best explains what Forex is. So what does Forex entail, and what does Forex trading actually mean? So by definition, Forex trading, or the Forex market, refers to the trading of financial currencies in the financial market. This is the largest financial market, whereby it has a daily turnover of about 2 trillion US dollars. So you can imagine the amount of volume that these traders actually trade. For example, the New York Stock Exchange on average trades around I think 25 billion US dollars on a daily basis. So you can imagine the amount of liquidity that is there. So Forex is a very fair game. Everybody has their own share of the lion's cake. So it's up to you to make whatever amount of, there's no limit to whatever amount of money you can make. You just have to get a slice of your cake, and that's it. So what is traded in the foreign exchange market? The simple answer for this question is money. Money is being traded each and every single day, because there are people traveling around the world each and every single day. Payments are being made to other countries each and every single day. So there's a lot of volume that revolves around this financial market. So for example, Japan has ordered goods from the United States. So to facilitate this transaction that is going to be made, the banks that are involved will have to make certain transactions based on whichever currency that is being asked for, or whichever currency that is being bought or sold. So you can imagine the amount of money that is going to be passing through the hands of a lot of people. So when we're talking about Forex, there are things that you should actually know. There's something called the base currency, and there's something called the currency that is now being bought or sold. So when the currencies are denoted in the form of comparisons. So you have, for example, US dollar, which is the USD, that is going to be denoted or compared to the value of another currency. So for example, US dollar is being compared with the Japanese yen, which is JPY. USD is going to be slash USD slash the value of JPY, Japanese yen. So yeah, what currencies can be traded? The Forex market is very unique. We have a variety of options that can be traded. We have the US dollar, we have the Great Britain pound, we have the Japanese yen, we have the New Zealand dollar, Australian dollar, Canadian dollar. So each and every single currency can be traded depending on where you are located in the world. So let's dive into what are the advantages and what are the disadvantages of trading. The advantage of trading is that, as I mentioned before, there is very high liquidity. Everybody can take their share in the market, because it has a total value of $2 trillion daily. This money cannot end. It's not even logically possible. So it's a 24-hour market that revolves 5 days a week, but that is only if you're trading currencies. I'm going to dive into what commodities you can be trading later. You can, based on something we call leverage, you can multiply the amount of money that you're making. For example, if you're using a leveraged account of $1:200, it means of 1:200, sorry, it means that your $1 is equivalent to $200 in the market. So if you're using $1 to trade, it's the same as using $200, because based on that leverage that I've just explained, you're able to make profits that are 200 times greater than the amount of money that you have placed. So it's the same as controlling 200 worth or $200 worth of the same commodity that you've just bought for $1. I hope that makes sense. Trading in itself is a very risky business, and for you to get involved, you should seek the appropriate training before you actually use your own funds to trade any market, any market or any commodity in the market. That's why most of these brokerages that you use, a brokerage is a firm or a company that allows you to actually trade now assets or commodities in this forex market, because you cannot trade directly for the forex to the forex. You cannot trade directly on the forex market. You have to use something we call a brokerage. Unless you work at the New York Stock Exchange or London Stock Exchange, you cannot trade directly on the forex market. You have to use brokerages. The goodness of using a brokerage, most of these brokerages allow you to open up a demo account, whereby a virtual money account, whereby you can be able to see how the market is moving under the same market conditions, but the money that you're using to place a trade is virtual. So there are practically no losses that will be incurred to your account. So once you've finessed and bettered your strategy and you feel confident enough in your trading, you can actually now open a real account whereby you can be trading real money and make your own money. So what tools do you need to start trading? Trading does not require a lot of tools. It only requires connection to internet and maybe your cell phone device or a laptop. That's all you need to for you to get started trading. So there's a different batch of ways to make money when it comes to trading. As I've mentioned before, you can buy and sell certain commodities, or you can also hold a stock. You can also buy a certain amount of a stock and hold the stock and wait for the price to increase. So in short, you can buy high and sell low, and also you can buy low and sell high. So I don't know if in your country the price of certain commodities probably varies. So you can find one forex broker is selling, for example, here where I'm at, Kenya, $1 is currently retailing for 143 Kenya shillings. So you can find that in one forex broker, you can find that the value of the US dollar is 141. Another place you get it 143, another place 140, another place 147 even. So this difference in prices creates now something where you can, an opportunity for you to make money, if I may put it in that perspective. So that's one of this difference in prices. The money just doesn't disappear. The money is always there. So if you're to table all this information and compare the value of the Kenyan shilling to the value of the US dollar, you can see opportunities where you can make money and you can buy or you can sell the certain commodity. Once, sorry. I think I've probably explained how you can make money on the forex market. Now let's dive into the certain different types of commodities that one can trade under the forex market. So companies that are listed on the forex market, for example, the S&P 500, Nasdaq, or let's say major Fortune 500 companies, have listed themselves on the forex market, and whereby you can be able to buy a fraction of the company, a stock, and you can be able to make money from the gains and the losses of this company. So for example, We have derivatives, which are derived from the Fortune 500 companies. They've been broken down into so many commodities that you can be able to trade, so you don't have to actually buy the said company's stock per se. Other commodities that you can trade, for example, you can trade metals, which include gold, which include silver, palladium, and a wide variety of commodities, which include also oil. For example, WTI, Brent oil. You